welcome, welcome, welcome. It's Financial Fitness with Dave Rogers and my wonderful friend. Hi, Deb. How are you today?
Hi, Dave. I'm doing great. Starting to get a little bit warm again,
And
but
you've been out
overall, great day.
bike riding everywhere and enjoying the journey?
I always enjoy the journey. Less riding and more yard work this month, but revving up for an ALS ride on the weekend. So, yeah, thanks for
For
asking.
Alzheimer's, would that be?
No. ALS, the Lou Gehrig's disease. A friend of
Ah,
mine is raising money, and she has the diagnosis. So we're trying to support her, raise a little bit of funds for her
well, fantastic.
and
Maybe
awareness.
maybe a little later we'll put a plug in there. Just if anyone wants to reach out or talk to about that, we can maybe connect you to for that. Because in the way that we look at finance, it's all about you. And this little first slide we had today was about you being the center of your universe. And we know that this is your financial universe. That when you see that picture of the Vitruvian man, Vitruvian woman, you are the center of your universe. Anything come to mind for you?
Absolutely. I trained in martial arts for many, many years, and I still teach women and high school girls when we have school. And my original martial arts, that was the symbol.
Beautiful.
So what comes up for me is a mind, body, spirit connection.
And so that's what we're here about. We're talking about your finance in this perspective, yet we were just talking about healing and trauma and things that you and I also are exploring. If anyone of our listeners wants to check out that, that's something that please stay in tune, because we're going to be sharing a lot more about that. So the process we went through was this little simple process of what firms that you admire, what stops you from investing. Congratulations, because you haven't stopped. You've actually been moving forward with it. The mindset shift, which we're going to talk a little bit about today, discovering your focus of your universe of potential investments. We've got you down to a number of stocks that you've invested, and now you're thinking about it on a regular basis, is what I've been hearing. We've got our paper trading, which we're going to reveal today, the stock portfolio that you chose. We're also going to talk about the investments that you have with TD, and we'll talk about actual monies at risk. And then to put the money or not, that's for any of our listeners. You don't have to, yet you have, and that's why we've got a bit of a charge around it. Is there anything about this process that you might want to point out or add a comment to?
The only thing that I would say, and I knew that, I originally bought a few stocks last summer. It's actually almost a year since I had purchased. And what's so important is to be aware. So that means, at least once a day, go in and look, but to keep yourself separate from it as well, in a sense. I know that, one of the stocks, LBS, that I had purchased last summer, it was higher. And then with, all that happened with COVID, and then it went down, and then it started to go up and everything. And if you're caught in the emotion of that, you can react really quickly. And it's training me to pause, because a couple times it went lower and I thought, well, should I buy a few more? And then that will average out the price in the stocks, which I did do. Right. But anyways, you can really be taken in these, one day it was at the what's it, the CNQ.
Mm-hmm.
We talked
Yes.
about that.
Yes.
Well, I went ahead and I bought some, and then within a week and a half, then it went down, and then it was like, I'm just laughing. I'm finding some humor in it, but I'm also, I think something really important is that you don't invest money that you don't have. And I've allowed a certain amount, and I want to learn. And I know that I'm quite confident that in time these stocks are going to come up, or they're dividend based, so I'm still getting some dividends.
Beautiful. Well, let's talk tragedy, because that's an expert area for both you and I. Is that we saw that someone in Robinhood, they lost $700,000 and they committed suicide. And so that's what's happening too. So it's a reality that maybe we don't go into today. If they're interested, I'm going to actually put your link on some of the psychotherapy work that you do and some of the grief work we do. Yet that is a reality, that when people are over trading, or they're doing margin, that you can lose money fast. And that's one of the things that might be occurring in the next little while. I've been talking to some of my trader friends, and and it could be get a little bit dicey moving forward. And whether we talk about it today or not, that's something that is definitely on my radar. And if you got a question about it, I'm definitely going to share it with you. Yet let's go into your portfolio, because that's really about what we wanted to talk about today for all of our viewers, and the just the process that we talked about it on paper, you put it into your portfolio. But this is the portfolio that we originally put together for you. I'm not sure if you can see it all, but we started with some Microsoft. And since you made the first sort of desire to own Microsoft because you like what they do, their product, it's up 5%. Apple, since you talked about Apple, it's up at 11.6%. AT&T's 1.87% up. BCE, Bell Canada, up 1.98. Your marijuana stock is up there at 18%. Air Canada, wow, you picked that at a good day. It's 14.92%. Space is flat. Virgin Galactic, and then TD is up 8%. And so when you see that, any response or any questions, because this is what's cool. This is what we talked about. It was a very well diversified portfolio because you had the stocks that could soar, you had them that are going to give you dividends. And really, this is the type of portfolio that allows you to sleep at night.
You know, and when I look at that, in a sense, it's kind of funny because this is paper trading. So I didn't actually go and, you know, this is not what I did, right? I did look at the marijuana stock or cannabis or medicinal. That was the SIN stock. Mm-hmm. Right. So I looked more closely at that and did some research. And this was a stock that my friend who's been trading for a number of years, that she had recommended as, you know, if it gets to 6, you know, buy it at 6 kind of thing. Right. So it had been up and it went way down. So that was the only one that I actually purchased. I was going to purchase the Air Canada, but it didn't have a dividend. And I was watching it, and then all of a sudden it climbed. It went up, I think about $3 or $4 a share, something like that. Mm-hmm. And then I thought, oh, darn, I missed it, you know? Mm. And then it went down again, and I thought, oh, thank goodness I didn't buy it there, you know? Right. And what was the other one? There was another one that I was going to purchase and then didn't. AT&T I looked at. So I was really looking at some of the prices in terms of entry and how many shares I could get. And if I could only get a few shares, then I thought, well, do I really want to do that? Now, when you had done this one, Dave, you had also done one for your nephew, and you had talked about the CNQ.
Yes. And
I looked at that one. I thought, yeah, you know what? I like where that one's sitting. So that was the one off of his paper trading. Mm-hmm. That I had purchased, and then I purchased that in around 27, mm-hmm. and then I think it's at 23 now.
Right. Yet what's beautiful about it is that it is at 23. Now you could buy a little bit more. It will give you a higher yield, and if you're going to have a relationship with them, you get a little bit more comfort, and that's the beautiful thing about having a core position and then trading around the core position. And that's one of the things that it requires learning cycles. It's like when you go for that bike ride, you're not going to be bike riding the way you do it, up and down and feeling all comfortable in every condition, unless you put on the 5,000 or 10,000 hours. And so that's where I'm really encouraging people to do a little bit of trading, a little bit of investing, but also this dialogue to understand the psychology of it. After you, like what's been beautiful about even just getting feedback from you is that get the feedback and try it on and then go do something with it. And that's what trading is. That's what investing is, because you're not here to be 100% right. Like this is not school. You're not getting graded and getting a 97 percentile. If you get 60% of your choices accurate, yet more importantly, if you get, when you make a mistake, you correct it, it's going to allow you to save the most. So it's a bit of a counterintuitive of what the way that we've been taught school.
There's so much to learn. That's what I'm
Mm,
learning. Even the
yes,
terms.
yes.
And I spoke to you, was it you or was it my friend the other day? I can't remember, but when she was speaking about, we bought the LBS last summer. So it was 738, I believe. And she said, that's at a good place. She said, just buy it and you'll get dividends and just sit in there. It's at an all right place. Well, then in March, it was going down like everything else was going down. And then it was at 4. So rather than focus on, oh my gosh, here I bought maybe 500 shares at 738. When I spoke to her, she was like, well, buy more. This is what you want to buy more. And and this is, my, you know, being so naive. My naivety was such that I thought, well, I'll have some stocks that they'll be the 738 stocks, and then I'll have some stocks that are the $4 stocks. So that demonstrates how little that I knew. They actually come together, and now I'm sitting, where the average share prices is different. So like I wasn't even aware of that.
Yeah.
So there is so much to learn and the different terms, and
These are the learning cycles, and that's why I
so
like,
I'm so appreciative.
yeah, the learning cycles is what Wealthsimple, the Robin Hood of Canada, allows people to do. Is that you can do a $100 trade or a $200 trade, and so you get the learning cycles of buying and selling, buying and selling. You get the learning cycle of buying and buying and buying and accumulating, and so you have these different ways to allow yourself to have little bite sizes instead of getting blown out of the water by putting all your eggs in one basket, which happens. It's going to happen. And in fact, what I'm feeling is that there's going to be quite a few people in the next 2 months are burned, because if you're on leverage right now and the market crashes, you're going to get a margin call. You're going to be wiped out. That's what they allow people to do in the States. And so the Americans right now, they like to give people as much credit as possible. But then if you're leveraged and the market goes down, you'll get wiped out. And that's something that you and I are not doing. We're putting a little bit at risk. We're allowing ourselves to have a learning cycle with each trade, each investment. There's some of those stocks that hopefully you'll own for the next 10, 20 years. And that's what I like. I've owned some stocks for over 30 years.
Wow.
I'm not planning to get rid of them. I will trade around a position and I'll enjoy it. So let's just click up your last little slide here where it just shows you what the portfolio did. And so if we look at it here, and can we see that pretty well? There we go. So in about 6 weeks, if we had put the monies at risk, you would have had a 17,000 portfolio and you had been up 7.75% in total. And that's sort of the breakdown of all the different shares, some up, some down. Actually, most of yours were doing fairly well. Yet it's something that you could sleep at night. It's not, and that's beautiful about the way you're doing your portfolios. You sleep at night. Yet you can ask yourself and be nice to yourself, because it ain't about beating yourself about being perfect. It's about allowing each of these trades to be a learning experience, a learning cycle. Like you've asked me recently about a stock that I looked at. It's a dollar stock. It's in the cannabis space, which from your questions, I went out and did my research about the cannabis space. So I made an investment in the cannabis space. I think it's a risky stock, which it's been up 15%. It's been down 7% in 2 months. That's considered a risky stock. So, and it's good because it allows me to be involved in an industry that is going from a multi-billion to a decabillion to a hydrobillion to $1 trillion industry.
Mm-hmm.
And so if you aren't, as an investor, interested in a Tesla, and that's what we're noticing in the marketplace, is that some older investors aren't looking at any of the software as a solution, any of the cloud-based solutions. They're the ones who've missed the growth for the last 6 months. And so for me, I've got to look at this, and I did my analysis of Amazon and Apple and Google. And I actually looked at their financials and said, buy more of all of them. And so a month ago, I just started buying a little bit more. Like, it's not about putting everything at risk. No, it's about Apple just hit a high. Guess what? There is a philosophy of buy low, sell high. There's also a philosophy of buy high, sell higher. Now, I'm not saying do that for everything, yet if you really do love Apple and you know that 5G is coming about, if you bought a little bit at 355, its new high, is it going to go to 400 first or 300 first? And if it goes from 355 to 300, would you buy more, or would you never want to use Apple again? Now, by saying that, the value I'm offering today is, don't be in a hurry right now to buy anything. I believe, and I'll make my little risky information to you, in the next 2 weeks, we're going down. And so if you've been looking for things to buy, create your shopping list. And if it goes down as much as I think it might, nibble, nibble, nibble.
Mm-hmm.
How's that for you?
Yeah, no, I appreciate that. And that's been my whole philosophy, when we originally talked a few months ago with some other investments that I have, and it's like, this is going to tank. I believe the economy it has to go down. There's been such a shift. And I mean, I don't know. I don't have the expertise that you have, but the feeling is logically that we're going to take a hit. It's going to, sort of like the COVID, people are going to start to feel a little more comfortable, but we're not done it. If you look at the history of viruses, it's going to come around again, and we're seeing that in some areas already. And when that happens, it's going to hit the economy again. So I really do, believe what you say logically, that it's going to go down. And then when it goes up, who knows how far it's going up again. But I have put aside a little bit in terms of that I'm just sort of waiting. And if and when it's going down, then I'm looking at, purchasing a little bit more. I hate to think that ultimately everything is crashing, forever, and then we're not going to have any money anymore. We're going to,
Well, be farmers. You did your garden. I was doing my garden yesterday.
I have my garden. I've already started to eat out of my garden this year, so I'm good probably to the fall. I could survive off of my garden. But all that aside, I think things are going to be going down. So I continue to look at that. I have been diligent every day, going in at least twice a day, typically, like you said, in the morning and at the end of the day. I'll go in and I'm looking at, for example, TD and Air Canada. And Air Canada started to go up, and then all of a sudden it went down. And I looked at the spread over time and where was the lowest low, and looking at all these things and going into how much money they have in, in the reserve, and some of those things that you shared. And I think it's a good idea. And I did that with the medicinal stock, actually, that we were talking about. Yes. What is it? RB, what is it? What is the one we were looking at, Dave?
RBS?
RBS. Yeah. So that particular one, I thought, well, and this is, my friend, and when, all the pot stocks started to become available, she actually went and bought several of them when it was all legalized, and then she sold them. She has a few, but she sold them. So she's playing that because she understands way more again than I do. It's kind of like, you make up your money, maybe you double your money, and then you sell half of your shares, and then so you still have your other shares. If they go down, maybe you buy. So she's playing at that
beautiful
that level.
Well, I think where you're at right now is perfect for the journey. Feel free. Again, we're going to meet up regularly to go through your portfolios, any questions you have. If any of our friends today liked it, please hit a like, add a comment. I'm going to say that I am going to give you probably a tip offline. If anyone wants to know what it is, you subscribe, and we'll also share that on ways to take advantage of the upcoming drop in the market. How's that for a little hook to talk again very soon?
That's great. Maybe we'll talk about that tip later.
All right.
Thank you so much. You know,
Thank
I
you so
really
much. All right. You have a great day, and really appreciate you and the financial fitness journey that you're on.
go look.